The S&P 500 is down 4% on the days. The Nasdaq is down 5%. Many individual stocks are down 5, 6, 7, 8, 10%. Even in some cases 30 or 40%. So it's been an absolute bloodbath in the market. It's been really, really bad. And I'm sure a lot of the newer investors, maybe you're struggling today. Maybe you're feeling that this is like the worst thing ever, and you feel like giving up. You feel like maybe investing isn't for you, and maybe you're just scared in general. And I just want to do this video and let you know that you're not alone. I also got scared when I had my first market pullback. When I had such a red day, I got scared. And every single person gets scared. We all go through the same cycle. We all go through the same phase. But it's very important to remember that nothing really lasts forever. Just like right now, we're having terrible red day and you're scared and you're upset and you're sad. You're going to also have amazing green days where your portfolio is going to be up maybe 8, 10, or 12 or 15% in one single day. And it's going to feel amazing, trust me, especially if you held through the bad times and you bought the dip when everyone else was selling. You're going to have amazing days. But you cannot take the good without being willing to take the bad. And investing isn't easy. If it was easy, then it wouldn't be so rewarding. The main reason why it's so rewarding is because very few people can actually beat the S&P 500 over the long term. And this is why Warren Buffett is Warren Buffett, because investing isn't easy. If it was easy, then everyone would be the next Warren Buffett. But most of us in the market, we go through the same cycle. We go through the same phase. And if you can get through this phase for the first time, then you know that investing is actually for you, and you're going to have a much easier time ahead. Like, just imagine, now you're taking 5 or 6 or negative 10% days. Next time you're going to have a negative 2% day, it's not going to feel as bad. So this way, you're going to be more in control of your emotions instead of the market dictating your emotions. So the more bad you get, the stronger you're going to get, and the more emotional discipline you're going to have. But we all go through the same cycle of the market emotions. Every single person. I've gone through this too, and many different people. But the main thing is that if you don't give up, and you go through the cycle, you're going to see the best gains you've ever seen in your life. And it's going to be much, much easier from here. But if you do give up, like most retail investors give up whenever they should be buying, then you're going to know that investing isn't for you. And maybe you could invest in ETFs or real estate or something else. And there's nothing wrong with that. But you have to go through the cycle to know that if investing is actually for you or not, because you're not going to learn that when the market's going up. You're only going to learn that when the market's going down, and whenever it just doesn't feel easy to be buying something. Now, the market cycle, it always happens every few years. It starts with optimism, mainly around a certain thesis. It started in late 2022 around AI. In 2020, it was EVs and Tesla and electric vehicles. NIO was getting bid up, and a lot of those kind of battery stocks and solar stocks were getting bid up. And those are the stocks that have crashed the most in 2022 and in early 2023. Now we had the AI rally over the last 2 years, and now the AI stocks are the ones that are correcting the most during this market pullback, which is down like 10 or 12%. But it mainly starts with optimism. We reach peak euphoria. Euphoria is whenever it just feels so easy. Like I always say, that the best time to buy is when it's not easy to buy. The worst time to buy is when it's easy to buy. So the worst time to buy is in times of euphoria. Whenever you buy the stock and you feel like you didn't buy enough, like you buy the stock and it goes up, you buy the stock and it goes up, you get instant feedback that you're making the right decision. You feel like you're the best investor ever. You feel like sharing your screenshot of year to date and bragging to other investors on X. And this is something, I joked about last year on X, and I shared my returns. And I said 2025 will be ugly, because I've been long enough in this market to understand is whenever you have such feelings that you're the best investor ever, this is normally when the market is coming to humble you in the next 6 to 12 months. And this is the time to take some risk off the table and have some defensive stocks and recession-resistant stocks. Not right now. The time to do it is when most people aren't doing it. Like, for example, this year, I have many stocks that are up 20, 25, 30% year to date this year as the market's going down. Because last year, those stocks were struggling. Many stocks, you say, look, McDonald's is green, Pepsi is green, a lot of the boring dividend stocks are green after being red last year because people didn't actually want them. So this is the best time to be getting into those stocks, which I'm going to talk about in my video on Sunday. You're going to like it very much. But then we start going down and we reach a phase of just depression. Like when you feel depressed, you feel like giving up, you feel like, maybe you want to break your phone. Like people in 1929, they were jumping off the balconies. I hope that never happens. I hope never. But this is kind of what happens during depression kind of phase. I don't believe we're in the depression phase. I believe we're most likely right now in the panic, getting closer to capitulation phase, but we're pretty much desperation to panic, I would say 100%. We're nowhere close to, depression where people are jumping off Robinhood. Robinhood is still seeing increasing in usage. Once people start leaving Robinhood, then you kind of know that, maybe this is it, and maybe this is a generational kind of bottom. But this is how the market cycle works, and this is normally the best time to be buying. But this is when a lot of retail investors sell. They call the market a scam. They believe it's the worst thing ever, and they give up whenever they should be buying. Now, just like I told you about the theme, whenever it starts with a market cycle, it starts around a certain theme. Sometimes it's AI, sometimes it's EVs. Now, there's two things you could do in a market pullback. The first thing you could do is look into stocks like Nvidia and other amazing companies within AI. Now, people don't want them anymore. They want the recession-resistant stocks, but they no longer want the AI stocks. So the best time to look into the AI stocks is right now in a market downturn when people are bidding up the recession stocks and are forgetting the long-term tailwinds of AI, which are going to be here for the next 10, 20, 30, 40 years. This is something transformational, and you could maybe find a lot of value in those stocks as investors right now no longer want them. But you can't only just look at AI. You could also potentially look into another potential theme, like what could it be the next one? Because it's unlikely to be AI. It will likely be something else that the market will get excited about. And I said it many times before, and I'm going to say it again. I believe it will likely be robotics. I said 2020 to 2021, it was EVs. 24 was AI. The next one will likely be robotics. And I listed some robotic stocks over here. Amazon is one of them. But I'm going to be honest, the most interesting one is ISRG, Intuitive Surgical, within robotics and automation within the medical space. It's very interesting, but it's not close to my fair value. And there's many different ways you can get exposure to robotics, and you could look at the stocks and research them for yourself and look into them in general. So this is what I believe will likely be the next theme, and this is where I'm doing a lot of research right now. The second one, which I'm looking at, and I still haven't bought it, I'm still, waiting for my fair value, and this is Toll Brothers. So right now we have the 10-year going down, we have interest rates coming down, we have mortgage rates coming down, and all of the sudden Wall Street, they no longer like the housing stocks. Even though Toll Brothers average home is like $950,000. So the people that are buying $1 million homes, they're not really struggling. They don't care if interest rates are 7 or 6%. But if they're coming down, then they're going to be in a much better position to even afford them. And the company has a backlog. They're buying back like 8 to 10% of the market cap. And it's such an amazing company. And those are kind of the things I'm looking at. And this is what you should be looking at instead of looking at your portfolio, seeing how much you're down and seeing how much, you just can't take it anymore. You should be looking at what could potentially be next. When most investors are focused on the present, you have to try to focus on the future and be ahead of the game so you could make it back on the way up. You made some mistakes, you learn from them, and you can try to make it back after everything recovers. And this is what I just wanted to talk about today for a lot of the newer investors. Maybe it was a little bit encouraging. Maybe it was a little bit helpful. If it did, let me know in the comments. Thank you for watching me again. If you did enjoy it, let me know. Press the like button, not financial advice, and I'll talk to you in another video.